Firstly, thank you for joining. Welcome to the Making Tax Digital webinar. My name's Declan. I'm a digital solutions specialist here at Monaghan's, and a big part of my role for the past 7 months or so has been making tax digital, looking at all the softwares, finding out all the requirements from HMRC and seeing how the softwares can cope with them if they can. Great part of the role is everything we've seen over the past 7 months, we can now give to you guys to help you on your journey and make this as easy as possible. So, what is it? What is this Making Tax Digital for income tax? The first and probably one of the biggest changes for many is keeping digital records. This is using a software, they are generally cloud-based, to keep track of your income and expenditure for either your self-employment or self-employments and any rental properties you have. Within this digital record keeping, HMRC are looking at things like trying to get your receipts, your sales invoices if you have them, any other purchase invoices. They want them all stored in there, ideally with the payments, so that it's all in one place. Now, this can be a really good thing. It means you can have all these documents in your software, meaning you don't have to have that big box in the back of your cupboard if you don't want to. If you are happy everything's in the software, that box is essentially redundant. The next big change is sending a quarterly update to HMRC. Now, for this, it is a cumulative return. So your first quarter will run from April to June, or the 6th of April to the 5th of July, depending which quarters you pick, completely up to you. The next return then will build on that first quarter so that you always have a year-to-date summary, if that makes sense. Now, I will say here there is no payment due on these quarterly updates. They are simply just they're just estimates, really, so that we can use to help speed up the process of a tax return at the end of the year, which is the next point. But also it gives a bit of a standard for preparing the tax return, and it's not just off of a spreadsheet at year end. And like I said, you'll still have that good old 31st of January tax return each year. Following the end of the tax year, that will be where you add in any other income or tax reliefs that you may have throughout the year. I will just quickly say, if you have any questions throughout this, please do put them in the Q&A box. We will have a section at the end where I will be going through as many as I can. If there's lots, I may not be able to cover all of them. So, a bit of a timeline. Obviously, April 2020 is now here. So, on your 24-25 tax return, if you had income of above 50,000, you are mandated from this year. By income, that does not mean gross profit or profits that you've paid tax on. This is looking at strictly turnover. So the gross rental income you've received before any expenses, plus the gross sales you have received from any self-employments. To get to these limits, you need to add together your self-employments and landlord income. It's not just one or the other. In April 2027, this limit of 50,000 then drops down to 30,000, and that will be based on your 25-26 tax year. So that will be the tax return that is about to be or is currently in progress. Have a look at that. If you are over 30,000 and you weren't affected by 50, you will be mandated from next year. And then April 2028, again, this limit drops down to 20,000, and that will be based on your 26-27 tax return. At the moment, this is only self-employment and landlords that are affected. There has been deferrals of groups until at least 2029. Certain things like partnerships at the moment are definitely exempt, and trusts. This is not us saying that they will never, ever be considered in terms of MTD, but right now, all we're looking at is your sole trader income and any rental income you may have. So what do we need to do? So the biggest thing to start with before we can do anything else is understanding your eligibility. Look at the last tax return you have filed. Is your property income over 50,000? If you have self-employment, does that take it over 50,000? If you're not sure, please do just send us an email. Please do phone us, get in contact. We will be more than happy to help you understand when you may be affected and if you are affected. And another big thing is if we establish that you have hit the 50,000 mandation limit and you are now in MTD, you will need to sign up. It's a very big misconception that it's an automatic thing. HMRC have sent out various letters, I believe, saying you need to sign up for MTD. We believe you're affected. Now, there are exemptions. They are hard to get for most. So if you do believe that you are entitled to one of those exemptions, a full and comprehensive list can be found on the HMRC website. If you do think you might be eligible for an exemption, again, talk to us. We'll do our best, but they're hard to get. So we're going with the approach of we need to sign everyone up unless you do have a very good, solid state case for a exemption. Once we're signed up and we know that we're in it, we can then look at digital record keeping. So the biggest thing here is using the right MTD compatible software for you. There are so many softwares out there on the market, and I've come across, not just for MTD, but just in general, people going to softwares because it's what a friend or a colleague has used before. Now, that may be great and it may be a perfect situation for you because you have someone that knows the software to help you out. But if it's not the right software for you, please do not go for it. Going for the right software for you will make this easier on you. If you choose the one that's not so right for you, come the 7th of August when we hit that first filing, you're going to be in a bit of a stressful situation trying to get all your stuff to HMRC before the deadline hits. We will go through at the end of this a few softwares that we currently use in the practice. Again, it's not a comprehensive list. They're just a few, and I'll outline some of the key differences between them. The next thing we can do is use receipt capture tools where possible. So these tools are designed to make our bookkeeping life extra easy. So if you go to Tesco's and you buy maybe some lamps for a rental property, it's a rental expense. We need that receipt in the software. Now, these receipt capture tools, most of the softwares have them for free. They can come in the form of an app as well. All you essentially do is take a picture of the receipt and invoice, and once it says it's uploaded, it's then in there. All we then need to do is just make sure it's gone to the right contact. So if you have been to Tesco's, make sure it's a receipt from Tesco's. And if it's just general repairs, then we need to make sure it's gone to that category. Obviously, we are here to help with the setup and help you get used to them because it is a big change and big changes can be very daunting. Not everyone wants them. Not everyone is most happy about them. But we are here to help you through this and help you get to a point where this can be a perfect situation for you. Now, you will see there it says avoid spreadsheets where possible. HMRC are accepting spreadsheets at the moment through something called bridging software. They're not an ideal world solution from HMRC's point of view. They're kind of just a cheap way in their eyes. It doesn't have the same capabilities of all the digital links and being able to store your receipts and sales invoices. So whilst HMRC do allow spreadsheets, there is no correspondence that it's going to be a prolonged thing. So where possible, so it's not always possible, we are advising to try and move away from spreadsheets. Now, this is a big thing for a lot of people, and I know many people that love their spreadsheets and just cannot bear to part ways with them. And a few of them we have actually moved on to software with their say so, and they've taken the risk, and they've never looked back. The things that the software can do that their spreadsheet possibly took hours to manipulate to do, they love. They're finding it takes them a lot less time and it's a lot less stress. Organising your finances is the next point, and this again is going to be instrumental in making this easy for yourselves or for us, however much involvement you wish to have. So separate personal and business accounts. So by this, we simply just mean that say I have a self-employment. I want all of my self-employment transactions going through its own bank account, and try and limit to as few as possible any personal transactions going through there. This is just because it's going to be quicker for you. If you're doing the bookkeeping, you're going to have to spend time reconciling in the software all these personal transactions. If we're doing the work for you, if there's all these personal transactions in there, we don't want to see them. You don't maybe want us to see them. That is your private business. That's not for us to snoop around in a way. It is very much a thing that gives you a bit of privacy if you have them separate, but also, again, if we are doing the bookkeeping, it will probably be maybe a little bit cheaper if they are separate, because there will be less transactions for us to try and sort through. Keeping digital copies of receipts and invoices. Now, this links really well into the receipt capture tools. Where possible, we need to keep digital copies. That is how HMRC wanted this to go. They do understand, though, that they're trying to bring a large group of people from various situations, some already software, some still handing in a box of receipts at year end. There's nothing wrong with either way. There's an adjustment there, and HMRC have understood this. Keeping digital copies, though, we would highly recommend it. Not only is it how HMRC envisaged this, if you think from a year-end tax return point of view, when we're doing that year-end tax return, if we have a query on one of the purchases you've made, but there isn't a receipt or invoice in there, we then have to come back to you. You then have to dig it out of the box and send it to us if we need proof for it. Where if it's in the software, we can just click it. We can answer our own questions, hopefully, and it really will help speed the whole process up, not only for yourselves, but it will also limit how much you have to talk to us, which is always probably a win for you. You get more time to focus on your business rather than the admin side of it. The last bit is categorizing income and expenses consistently. Now, by this, if you have, say, a fuel receipt, and fuel is a regular expense in your, say, self-employment, it's just making sure that fuel is consistently going to, say, motor vehicle expenses. The softwares are really, really good in the sense that a lot of them have a very, very basic level AI built into them for this. So it won't actively start reconciling and manipulating all your numbers. But what it will do is go, this is where you've put this last time. I'm going to suggest it. So it pre-fills all the boxes for you. And then you can go, I agree, or no, it's something different this time. So the softwares are there to help you sort of remember where you posted it, especially if it is an invoice that you get, say, once a month or once a quarter. You're not always going to remember where you posted it last. We sleep a lot in between those times. So the next step is decide your level of involvement. So we have various levels of help that we can offer. Our most basic package being that we will just do a submission for you. And then the top tier package, you give us your box of receipts and some bank statements, or link the bank to the software. We will do all of the bookkeeping, we will review it, and we will submit it. Obviously, we will send you the submissions just to check you're happy with the figures and for you to give it the ultimate sign off to say you're happy for us to file it. But we are here to help. We don't want anyone to feel like they're just on their own through this, that you have to suffer in silence or anything like that. We really are here to help. Alternatively, like it says, if you are confident enough and you want to, or you want to give it a try, you can do everything yourself. We have no problem with you saying, I don't want you to do it. We have no problem with you saying, I want you to do it all. We are happy to help, and I really do mean it. You're never fixed with your decision either. I know a couple people have gone for our review service. So we also offer, just in between the submission and the bookkeeping, that we can just review your bookkeeping and submit it if we agree with your bookkeeping. If we make any amendments or we have any queries, we will always communicate them with you so that you can learn. Otherwise, if we don't tell you, it's not going to benefit anyone. But you are never fixed with that decision. So those people have gone on the basis of review it for the first couple quarters, and then after that, I'm going to try do it myself if all's going well. So you can always change your mind. Just please do give us enough notice. We don't want to start work that maybe you want to pick up, or please don't come on deadline and say, here's all my bookkeeping, I need it done, because we cannot promise it will get done with that short notice, if you understand. The next point is understanding penalties. Now, great news for this. The very last bit on that list is penalties for late submission are postponed until April 2027. So we have a chance to get used to it. This does not mean that we can just kick it down the road and say, oh, well, as much as we wish we could, we do still need to get in the habit because it's coming for us next year anyways, with the penalties. So our first quarter will either run 1st of April to the 30th of June, or if you opt for tax year quarters, you will run from the 6th of April to the 5th of July. That will be your first quarter. You then get till the 7th of August to file. So if you're doing calendar quarters, so the 1st of April to the 30th of June, it runs very similar to VAT if you have any knowledge of that. 30th of June rolls round, you get 1 month and 7 days. So the second quarter would end in September. The 30th, you then get till the 7th of November to file that one. So you always get that 1 month and 7 days. Now, if you choose the tax year quarters, so you end on the 5th of July, you don't get any extra time for those extra 5 days that you go into July. You still have to file by the 7th of August. Your next return would finish on the 5th of October, so that would then be due still by the 7th of November. Everyone will have the same deadlines to keep it nice and easy so we're not getting confused. The late submission penalties, it is a point-based penalty system. So by this, if you submit your return that's due in August late, you just get a penalty point. You don't get a fine. It's when you reach your fourth penalty point. So for every one you file late, you get a penalty point. When you hit that fourth penalty point, that is when you get a fine. And I do believe that HMRC have said it will be a £200 fine for this first offence. For every late submission after that, so for the fifth, sixth, maybe seventh late submission, there will just still be that fine. You'll get a new fine every single late submission from there on. If you get some penalty points, because things happen in life, we do sometimes have to put things in late. Whilst we don't want to, if you get a penalty point, there are ways to get rid of them. So if you file your, say, one that's due by the 7th of August late, you then you get a penalty point. You will then need to file your next 4 returns on time, and then that 5th return that you've then consistently filed on time will remove that penalty point you got. So it does take just over a year to remove that first penalty point, but if you were, say, at 4 penalty points, that 5th return on time removes the 4th penalty point, same as it would with that previous example. And then everyone you consistently file on time after that will remove any other penalty points you have. So there is, if you happen to put one in late, they're a bit lenient on it. You don't get given fines straight away from the get-go. Now, one penalty that we do need to look at that isn't listed here is improper record keeping. So with improper record keeping, they will be looking, whether it's a human or a AI assistant, that will have sort of boundaries, and if it's outside the boundaries, it will ask for human help. They'll be checking your 4th quarterly return against your annual tax return. The 4th quarterly return will be that summary because the returns are cumulative. So on that 4th return, those figures in a perfect world would match exactly to your tax return figures that we would use. Now, obviously, there's always going to be some adjustments. There may be a private use adjustment. There may be some odd little tax adjustments that we have to make that HMRC can't necessarily expect the general public to learn. That's why people get tax degrees. We can't all be tax experts, unfortunately. So what they'll do is they'll look at this 4th quarter versus your tax return. If they don't match and it's outside what they would deem as a reasonable variance, they will essentially open an investigation into improper record keeping. Now, if that happens and your records are up to scratch, you have everything on the software, you are absolutely fine. It's annoying, it will be a pain, but you will make it through, hopefully, unless they find something really, really hidden. So the more we keep in our softwares, the more we protect ourselves from that improper record keeping fine. I do not know if HMRC have released the guidance. I will, on that one, I will keep checking though, because it is a useful figure to know. Lastly, talk to us. We are here to help. Any part of this, we can help you. So the software, we can help you choose which software is best for you. We can even then help you set it up so that it's tailored to you. They do all come as a standard package, but a lot of it is customizable. So it can really be your software. We can make it yours and not blend in with everyone else's. We can make it so that the nominal codes are easy for you to understand, so you know exactly what to put where. We can do invoice templates as well. So if you're a sole trader and have an invoice and you don't really want to change the way it looks, we can put that into the software and give you the invoice template. We can also help you understand how MTD affects any tax planning. So with this, for some, you may already have live figures throughout the year, but for a portion of the population, this now gives you live up-to-date figures halfway through quarterly in the tax year. You can know halfway through the tax year, roughly, it will obviously be a very rough estimate, what your tax liability may be. And we can utilize any measures to reduce that tax liability before the end of the year. For some, this will be great. Like I said, for others, you may already be doing this. But it's just something to be aware of. The other thing we can help you with is registering you for HMRC. I know it's not on the list, but it's a big thing. I know earlier I said you need to register. It's not automatic. We can do it for you, or we can help you with any questions you get stuck on. I will say it's a nice, easy, user-friendly thing they've set up. It mainly asks you for your first and last name, national insurance number, and your date of birth. It then goes into your trades. For your trades, it will ask you a start date, and don't get too bogged down in the start date. If it's before April 2023, I think it is, you just tick a box to say it's before then, and it just automatically pre-populates the start date for you. They don't need to know if it started in 2005. They just want to know if it's less than 3 years old. So we're now going to move on to software, and then once we've done the software side, we can then look at any questions you may or may not have had. So what to look for in MTD compatible software. Big things are, is it user-friendly? The best way to know this without signing up to the software and purchasing it is if you have access to stuff like YouTube, even just a simple Google search of that software name and then bookkeeping. There will be thousands of videos out there, from professionals down to the software companies to everyday people that have had to use the software or chosen to use the software. Have a look, see if it's something you think you could possibly get on with. I will say I'm not expecting anyone to look at a software and jump with joy and think it's the best thing ever. But the ones you think you can work with, we'll focus on those ones and we can go from there. There will be some out there, though, that you will just look at and think, so overcomplicated, so not for me. And that's absolutely fine. There's so many out there, they can't all be for everyone. Is it fairly priced? Have a look around for a few different websites and what they're charging. If it seems sort of within a reasonable range, then absolutely. If in doubt, please do talk to us. We have a knowledge of a few softwares, not a lot of the MTD ones, because there, like I said, there are thousands, so we only do look at a small portion, but we will be able to tell you if it's a fairly priced software. Does it connect with HMRC systems? A lot of them, when you open the web browser at the moment, it will tell you straight away something about MTD for income tax if it's handling it. Again, if you're unsure or the website isn't clear, talk to us. Or alternatively, HMRC have published a full and comprehensive list of all softwares they are recognising as MTD compatible for MTD for income tax. So if you're even looking for what software to Google, there is a full list on their website, and there are so many out there that you could spend a whole day looking through them all and still wouldn't see everyone. So you don't have to look at them all. Just pick a few that maybe you like the sound of or you've heard of, see if they're right for you. And that brings us on to the last point. Does it cover everything you need? Now, I know I've stressed this, but I cannot stress it enough. We need to make sure it covers everything you need. Some softwares out there only do landlord and rental income. Others out there focus on the sole trade side of things. So if you've got a mixture of both, those softwares that only do one or the other aren't going to be the best fit for you. There may be a better fit out there. So it's always just looking at that, and like I said, if in doubt, please do reach out. I will put our email address up in a minute for our MTD inbox, and any questions, whether it's software, when's my returns due, anything like that, please do email us and we'll be happy to help. So again, these are just some of the softwares, very much not a comprehensive list. These are just some of the ones that we currently have strong dealings with already in the firm. So we start off with Xero. Xero, you can do multiple income sources within one subscription, even if you have multiple properties. Now, I will quickly add in income sources. It's one submission per income source. So if you had a sole trade and some UK properties, no matter how many, if you have UK properties and they're rented out, they're all just lumped into a UK property business. I would have to do 2 returns each quarter, one for my sole trade, one for the properties. Xero can do all of that within one subscription, so you'd only need to pay the monthly fee once a month, and you get to file for all of your needs. If you say had 3 sole trades, that would still be 3 subscriptions, and you could all do it within one Xero license. The only thing I will say is, if you've got multiple trades, watch out on the size of them, because sometimes it can be more beneficial to have them in separate licenses if they are of a larger sole trade size. Xero allows invoicing and bank feeds for easy bookkeeping with built-in data extraction. So it's built to be a one-stop shop for your bookkeeping needs. It even has a mobile app for expenses and your bookkeeping. So if you're someone who is always on the go, you never really will have the time to just sit down and do the books. Perfect. There's an app for you to be able to do it while you're on the train or just sat having a break at work. There's an app for this. Free Agent is the next one. Now, this is one income source per subscription. So this is mainly because they try to really want to differentiate between each submission that you make. But also, Free Agent have Free Agent Landlord and Free Agent Sole Trade. Free Agent Landlord is really well built for the landlord scene. It can do unlimited properties. I believe it can do all tenancy types. It's really, really good for the software. It offers invoicing and bank feeds, mobile app for receipt capture and expenses. You will hear that coming up a lot. Pretty much everyone has brought out an app now because everyone else was doing it, so they didn't want to fall behind. Free Agent can do shared ownership properties in one license for all individuals. So if I had a property that was owned by me and 3 other people, all 4 of us could submit our share of the income from in one Free Agent license. So that's a really good feature from them. Xero are also doing shared ownership properties, but I cannot say too much about that at the moment as it has not been fully released. Sage is one income source per subscription. So again, they just did that to really differentiate between each submission that you will need to make. Again, it's allowing for invoicing and bank feeds to help with the bookkeeping, has a mobile app for receipt capture and tracking finances on the go. So they are all very, very similar. The main thing that you find sets them apart is the income sources per subscription and if they are built for sole trade or for landlord. The rest of the softwares we can sort of look at are, so we have QuickBooks. QuickBooks have, I believe a couple of weeks ago it is now, they have partnered with Hammock. So QuickBooks, it does do property and sole trade income. It is one income source per subscription though. Still got that app for receipt capture and on-the-go work, and it does invoices and bank feeds. Now, bank feeds, for anyone who's not familiar with them, this is just your software connects to your bank. really does is pull through the transactions as they clear in your bank account. So they're automatically put into the software. The link will need refreshing, I think it's every 60 or 90 days, so that it's not sat there taking information from your bank when you're not using it. So if you ever stop doing MTD because you fall below the limits, it will just stop itself after 60 days so that it's not unnecessarily taking the data. So QuickBooks have partnered with Hammock. Now, Hammock is rental income only. So Hammock was built by landlords for landlords. It is a one-stop shop, or it has tried to be, for landlords. Again, very similar to the free agent landlord license. The only thing Hammock really does extra is it can track stuff like your gas safety certificates or any other certificates that you may need to be getting renewed, or inspections that you may have. You can enter them in and it will remind you. I think you can edit the reminder dates to be what works best for you. So you can do it on the basis of a 30-day before, 10 days before, a week before. So that's a really good little tool in there if you're someone who doesn't always remember the certificates are coming up for renewal with everything else that's going on. So a useful little tool. Again, is suitable for all tenancy types, app for bookkeeping on the go, and unlimited properties with varying ownerships. So Hammock and Free Agent Landlord both do unlimited properties. They are very good at what they do. Those two have done really well for the rental income market, and they are definitely worth a look at if you've just got some properties to report. Lastly, we come on to Dext. So it's Dext Solo, this license. You can have up to 5 income sources per subscription on this, and they also do joint property. So it's bank feeds, invoicing and receipt capture, and rental statement extraction. Very similar to all the other softwares. It has an app as well. The main thing about Dext is only accountants can currently see the tax pages. So what this means is, if you were doing all your bookkeeping through Dext, we are the ones who have to make the submission and send you the reports of your quarterly updates. Dext have done this because it was built by accountants for accountants, the same way that Hammock was built by landlords for landlords. So that is the only drawback if you were considering Dext. Pricing wise, they do all fall very similar. Some of them you get free options with, others you don't have the free option, sadly. But another big thing is the free options don't always take that as free means it's rubbish. It's just the essential bits picked out the software. Some of the licenses are free, sort of with a bank account, a certain bank account, and that's how you get it free. Others actually have free licenses, and they are really good. Sure, they are the basics, but sometimes the basics is all people need. And if you are needing the more complex features, chances are you won't be on the little MTD license anyways. You'll be looking at a more robust software for your personal needs.